boy, those are some sexy cargo pants. Today's sponsor, SpryTack.com. Go check out their pants. They're comfortable, they're durable. You get free shipping and a 60-day money-back guarantee. Welcome back to Strongman Personal Finance. My name is Christopher Belli. I'm a certified CPA accountant. I'm a long-term boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And we got to talk about one of the most idiotic things I have ever seen in my entire life. This image that I'm about to show you is indicative of the average IQ and financial acumen. My son's banging on the door. Of the average WallStreetBets trader. Okay, these guys are complete and utter clowns. And if you follow them, you're going to get your cheeks clapped. All right. I'm sure the Reichsmarshal is going to say this is a great stock. Let's go check out what these idiots on WallStreetBets did. So, as we all know, make sure I'm sharing my screen. As we all know, WallStreetBets are a bunch of apes. So stupid. And we see what looks like a snapshot of a balance sheet, which, according to Jeremy, there's 3 balance sheets. And, he's highlighting retained earnings, and then it has these apes riding, an ape riding a horse. Yeah, that's how it freaking works. Hold on! Wall Street has it wrong. Bed Bath & Beyond has $9 billion in retained earnings. And then you got this little clown right here. F Wall Street! Because the whole point of WallStreetBets is that, everything's manipulated. All these short sellers, they're evil. They're screwing people over. And we're going to take all their money back because they're taking all of our money. Well, they could just buy an index fund. Anyway, the whole point of this image is that these clowns are focusing on, and this is Bed Bath & Beyond stock, by the way. I don't know if I mentioned that. These clowns are focusing on retained earnings, okay? Let me explain to you what retained earnings is. It is the accumulated profits and losses of a company added up ever since its inception. That's all retained earnings means. And it's based on the accrual basis of accounting. Think about this. Let's say you have a brand new company, right? In the first year, they make $100 of profit. Bottom line profit. Well, at the end of the year, they close the books and retained earnings goes from 0 to 100. Then the next year, the company makes $100 again in bottom line profit. Your retained earnings is now $200. You see how it stacks up? If you have a loss, let's say we're at $200. The next year, you have a loss of $100. That gets close to retained earnings, and it reduces it back to $100. Now, the two main ways that retained earnings is increased and decreased. It's increased by profits. The company makes a bottom line profit on its income statement. You'll see net income. That goes to retained earnings. And the other way that retained earnings is modified is if you have a loss or you pay a dividend. Dividends come out of the company's retained earnings. However, retained earnings does not mean cash. It does not mean cash. It's simply a record of all the company's accumulated profits and losses added up since its inception. That's all it means. A company could have a profit, right? And the next year, all the extra cash that they have could be spent somewhere else. But the retained earnings balance is going to be the same because it's only affected by profits and losses generally. I mean, you can do some adjustments, and if there's errors, there's other ways it can be affected. But generally, it's profits and losses and dividends. Those are the two main things that affect retained earnings. So when these idiots look on this, and Wall Street, of course, is concerned about Bed Bath & Beyond's cash position, and I am too. Retained earnings doesn't mean cash. And the funny thing is, look at the total shareholders' deficit and equity. They have negative, looks like $220 million of equity. Negative equity. The shareholders have been wiped out. There is no equity in this company for the shareholders. The company's debts exceed their assets. Oh, man, it's the future. You can't just focus on retained earnings and say, oh, look at their retained earnings. It's so big. It doesn't freaking matter. That's a historical record of profits and losses. All right. Let's go look at Bed Bath & Beyond stock. Now, I have their balance sheet here. All right. Notice something. Let me zoom out just a tad bit. What is the first thing you notice? The first line on the balance sheet. So we have three comparative balance sheets here. We have May 29, 2021, February 26, 2022, and May 28th, 2022. Look at the cash. What's happening to the cash? Every single period, every single time period, it's going down. They had $1 billion of cash, May of 2021, $439 million in 2022, February, and now they have $107 million of cash as of May 28th, 2022. But according to WallStreetBets, but the retained earnings is high, even though the total equity is negative. They're incinerating cash. What's going to happen if their cash goes to zero? What are they going to pay their bills with? Okay. What else is on their balance sheet? Inventory. They have a lot of inventory. Almost $2 billion, $1.75 billion of inventory. And I've been to Bed Bath & Beyond. I think it's one of the worst freaking stores. It's garbage. Like, who goes to Bed Bath & Beyond? It's like overpriced. I don't know. I can't even explain. I just don't like that store. And they have prepaid expenses, okay? So their total current assets are $2 billion, which seems good on the surface. But the vast majority is in inventory. And if you're having a hard time selling your inventory, you can't convert that to cash. And the others are prepaids, cash they've paid in advance for certain bills. Let's look at their short-term debts. These are debts due within a year. Accounts payable, $816 million of accounts payable. Accrued expenses and other current liabilities, these are like wages, et cetera, that are due within a year, $550 million. Gift card liabilities, $325 million, and operating leases. So you look at their current ratio, you'd be like, oh, the current ratio looks good. But if you focus on the cash, that's where you know this company is in massive, massive trouble. Let's look at their long-term debt. So it looks like their long-term debt, they packed on almost $200 million, well, exactly almost $200 million. Yeah, $200 million of debt in a very short time span. Why? Because they're burning cash hand over fist. Let's go look at their statement of cash flows. For the 3 months ended May 28th, 2022, they burned $383 million of cash. $383 million of cash. Holy crap. Holy crap. Look what they spent their cash on. Accounts payable, accrued expenses, merchandise, gift cards, blah, 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 blah. This company is on the verge of bankruptcy. And the hilarious thing is, they're still doing capital expenditures. Like, what are you doing? What are you buying? And we can see they're getting money. The only positive cash flow is from financing, which is they're going into debt. This company is on the verge of bankruptcy. And these morons, Wall Street's lying. It's manipulation. This just shows you how freaking stupid WallStreetBets is. They're a bunch of clowns, okay? This company has negative equity. Why would you buy this company when they're burning hundreds of millions of dollars of cash, probably $100 million of cash a month? I'm surprised they haven't gone out of business. I don't know what they've done recently. I would love to see their next quarterly report, but they've probably either packed on more debt or they've had a massive share issuance. Now, we go look at the stock action, and guess who's going to be able to give Bed Bath & Beyond money? All you stupid WallStreetBets clowns that are buying this stock are just tempting Bed Bath & Beyond to issue shares. You're just tempting them because you're elevating the price of the stock so high that issuing stock would not be a bad idea for the management. And y'all are going to get freaking wrecked when that happens. Let's see. So when the pandemic started, it was a $4 stock. And then, of course, we know this stock got caught up in the clown market because it roared up to almost, what was it, max price right there, if I can actually get it, $35. Okay. Then it crashed back down. And now the clowns are trying to pump it again. Stay away from this freaking garbage. Complete and utter trash that is on the verge of bankruptcy. But they lied to us. Look at the retained earnings. God, you people are stupid. But strongman, VT doesn't beat inflation. We need to stick it to the man. Yeah. Bed Bath & Beyond sounds like kinky nursing home. Yeah. I own 16 shares. I'm going to be rich, boy. Yeah, I'm sure the Ape Father bought this. Okay, I'll look at Ferrari. I need to get around to it. Surprise. Yeah, that's exactly what I'm saying. Profit is, historically they've been profitable. They aren't profitable now. I made money selling options on this degenerate stock. I mean, if you're going to touch this crap, obviously you want to be trading it. This is not a long-term investment. You waste a huge opportunity with your following. You can find a stock and pump it up. Someday I could do that, but I'm not going to because I have a heart of gold. Okay. And plus, I don't want to get thrown in jail. And it's the wrong thing to do. Let's see. Why are they repurchasing shares? I don't know. It's a good question. Bed Bath & Beyond, is this stock the future? This is so stupid. Anyway, guys, I just wanted to illustrate to you how stupid WallStreetBets was and how you need to avoid those idiot clowns, okay? Anyway, go check out sprytac.com. Don't forget to watch the commercials. You get free shipping and a 60-day money-back guarantee if you are not satisfied. Cheers!